Hey there, welcome back to our Know Your Business Numbers video series. Today we're going to take a look at the profit and loss statement. We're going to go over the basics. This is one of the most powerful reports that you have as a business owner. So let's take a look and understand it a little bit better. Now, sometimes you'll hear people say profit and loss statement. Also, we refer to it as a P&L. You might hear me through the course of the video actually refer to it as a P&L as well. In some circles, it is also known as an income statement. So if you hear the words profit and loss statement or an income statement, they're probably talking about the same thing if someone brings that up to you. Basically, it gives you a quick snapshot of your business. It's going to highlight your sales, your cost of goods sold, your expenses, and your profits. And the main purpose of this report is to tell you how profitable you are and why or why not. So what we're going to do is we're going to take a look at a few of these. Now, there are different styles, but they basically have the same information. So don't worry if yours doesn't look like any of these. It's probably still grouped very similarly, and it's more important that you understand the numbers behind it. The key is, how do you even read the profit and loss? Now, every single profit and loss, regardless of what it looks like, is going to go ahead and have your sales and revenue at the top. So we'll pretend we have a little business here, and we'll say that that business does $50,000. So the sales and revenue will be at the top. It'll say $50,000, and it'll basically account for 100% of the sales. Everything in your profit and loss is based off of a percentage of sales. The next thing you have as a group is going to be your cost of goods sold, sometimes known as your COGS. And basically, this is everything that has to do with putting that product or service together. We'll go over that in a minute. But in this particular case, we'll say it's $27,000, and that $27,000 is 54% of the revenue. So basically, 54 cents of every dollar goes towards cost of goods sold. After you take the cost of goods sold away from the sales, that's where you get your gross profit. So in this case, our 50,000 minus 27 gives us 23,000 or 46%. So once again, if we pretend for every dollar, 54 cents goes to cost of goods, and our gross profit, 46 cents, remains as gross profit. But we're not done yet. The next thing on your profit and loss statement is going to be your expenses. You have some that are fixed, you have some that are variable, and let's just say those come to $12,000, which represent 24%. So basically, we're going to take an additional 24% off of that 100%, which then gives us what our operating profit is. So when we take the $12,000 away from the 23, you'll see that we're left with $11,000. So now we're down to 22 cents remains as profit. Now, sometimes this will be called the EBITDA, or you'll hear somebody say EBITDA or some weird thing. Just know what they're talking about is there's one more group of stuff that can come off. It's a bigger issue for larger companies. You have some of it in your business, but it's not usually that big of an amount until you start earning some serious cash. The main one on here that I want to point out is from your $11,000, you have taxes that you're probably going to end up paying, and that does come off. So in this case, we'll say 15% goes towards taxes, which is an additional 3 cents, 3.3% off. And the net income, the bottom line for this particular business is $9,000, and that's 18%. So out of every dollar they do, they get to keep 18 cents. Let's take a closer look looking at an actual profit and loss statement. And I've got one here that I've kind of played around with to try to give you some ideas. Let's take a closer look, shall we? What you're going to notice here is at the very top is exactly what we talked about, where we talk about income. And in this particular case, it happens to be an ice cream store. So it's going to have all the different things that have to do with that. It's going to have the food, it's going to have the beverages, and it's going to break it down. Now, one of the things that's great on your P&L, you do not have to have it broken down, but I find it's very helpful for you to be able to understand your business. So you'll see here in this particular one, it's got the food sales broken down into beverages, cakes, cups, cones, soft serve, and everything else. And you're able to see that out of all of that, what percentage of the business. So in this particular case, we can see that for every dollar of income that comes in, 56% of it goes towards cups and cones. The reason you like the breakdown is it really helps give you a better idea of where your majority of your income is coming from. So the basic P&L is just going to have the total sales that you see right here, which will 100%. But if you can break it down into categories, you really do get a lot more information, as you can see from here, because we know that this is our top producer, and we know that that's going to be a big part of our business. Whereas if you drop down here to soft serve, it is not. So it's got some really good information for you to be able to run your business. Below the income, we start to get into the cost of goods sold. Now, the best way to think of your cost of goods sold is anything that it takes to put together and build that product or service. Now, not to be confused with expenses, which is what a lot of people get some confusion on. Think of it this way. Your cost of goods sold are anything that helps put together that product, used for that product, whereas your expenses is anything to support the business. It's the best way to look at it. So in this particular case, we know that our cost of goods sold are going to have the different products that make up the food costs. And then we got some additional things that go on cakes. And then we have the supplies, because we obviously have to put things in boxes and cups and everything else. So when you add it all up, you're going to go ahead and get your total cost of goods sold. In this case, it's $4,600 and 26%. So basically 26 cents out of every dollar goes towards the cost of goods sold, the COGS. Then what you're going to do is you're going to take your income minus the cost of goods sold, and that's going to give you your gross profit. You might recall that from the earlier slide. So basically at this point in our business, when we take our sales minus our cost of goods sold, we're running about 73% of the margin, which is $13,000. But we're not done yet, right? Because we still have to run the business, which brings us to our next item, which is our expenses. And we have different types of expenses because we have different categories, right? We have fixed expenses that don't change month to month, and we have some that change month to month based off of seasonality, based off of sales, different things. So in our fictitious business here, what we have is we have advertising, equipment rental, insurance. Now, do you have to have it all broken down like this one and put into categories? No, you do not. In this particular one, I found it helpful if I could break it down into categories. So you're going to see some categories on this page. And then if you go down to the next section, you'll also see where the labor, the rent, the taxes, and these aren't the taxes on the income. This is taxes that you pay, for example, on property and some other items that had to pay. You've got some payroll taxes, different stuff like that, utilities and whatnot. And you can see here that we have a total operating expenses. So if we take all of those expenses up, in this particular example, it comes to $10,000. So 58% goes towards expenses, which is pretty high. And in this case, you're going to notice that that's 58%, 58.87%. So basically, out of every dollar, almost 60% of it has to go towards the expenses of this particular company. So to get to our net income down below, we've started with our sales. We got down to our gross profit because we took away our cost of goods sold. But now we're going to take off those expenses. And after those expenses, we're going to drop down to the net income. In this case, it's going to be $2,675 or 15%. So at the end of the day, making 15%. There really is nothing to pay taxes on, which is why you don't see that in there. But if the business had made more money, you would have seen somewhere in here where we probably would have had the taxes coming off. All right. Now, just to kind of go over this really quick, just as a highlight, so you see them all together because it's kind of hard since it broke it up. We start off with our total income of $17,000. Then from there, we took away our cost of goods sold, and then we got to our gross profit. So our 17 minus our 46 got us down to 13. From there, we took off our operating expenses, which remember was 10,000. And from there, we would take taxes, but then we would get down to the net income, the final line of 2675. So you can see how I always say it's not about what you do in sales, it's about what you keep. So in this particular example, we did 17,000 in sales, but only got to keep 2,600. dollars out of all of that. And that's what you want to do for yours. So at this stage, I want you to take your profit and loss statement and I want you to kind of walk through it and see how it looks when you're breaking yours down and what your percentages are. Do you even have a profit and loss statement? You should be looking at your profit and loss statement on a regular basis. At minimum, you need to be looking at it once a month. At the end of the month, you need to look at it as well as have it for the year so you can see how it trends. There's a lot of you out there that aren't doing this. You're barely looking at it once a year when you put it together and you give everything over to your accountant. That's not what you want to do, okay? You really, to get on top of your numbers, you need to be looking at this on a monthly basis. There's a lot of tools out there to help you out with that. And we're going to continue to try to help you with those kinds of things. Plus, don't forget, we do take a deeper dive into this and the other lines on the P&L in our new course that we're working on called Know Your Business Numbers course. And it's not going to have the word course at the end, but you know what I mean. But we want you to know your numbers better, because if you know your numbers, you're going to make more money. You need to know where your money's going when you bring it in, because as you can see, somebody could be very frustrated at making $17,000 in sales and only having a little over $2,000 left. So you need to know where your money is going. And that's what we're going to teach you in this Know Your Business Numbers course. So if you want to learn more about that, just go over to knowyournumberscourse.com and go ahead and sign up there for information and to be let known every time that we do have more videos that we're putting out there. We are putting out a bunch of free videos as well, and you will be kept in touch with all of that. But we'll take a deeper dive into the learning and understanding your numbers so that you can start making more profit. And don't forget, hit that subscribe button right there so that way you can continue to learn more as these videos are released. And don't forget, listen to the Local Small Business Coach podcast on your favorite podcast app, or even here in YouTube, the episodes get dropped into, where each week we go over not only your numbers, but other aspects of your business as well. My mission, my goal is to help you become the best business people that you could possibly be so you can maximize your sales and profits.